Good evening, everyone, and welcome to Pull Up with Limbs and Things. Tonight, we are talking to Miss Donna Threadgill. She is the Vice President of Reverse Mortgage Answers. And why are we talking about physical therapy and money? Well, I often hear patients say, especially those that I work with, which are aging adults, I'm on a fixed income, right? And so that means that I don't have a lot of extra money to do things to my house that I might need to do in order to age in place. So tonight we're talking to Miss Threadgill, and she's going to give us a little bit of background on reverse mortgage answers and how you can use that equity to help you stay in your house, getting the necessary adjustments to make that easier for you to do. Welcome, Ms. Threadgill. How are you?
I am fine, and hello, everyone. I'm happy to be here with you tonight. And as was stated earlier, I am Donna Threadgill, and I'm the Vice President of Reverse Mortgage Answers, LLC. We're located in Catonsville, Maryland. We service the DMV, so DC, Maryland, and Virginia. So
Mm-hmm.
don't think that you can't do this if you are not in whatever area we cover. You're covered.
Oh,
We come to your home and take care of everything that we need to do. So it makes it very convenient for you from beginning to end. We have
absolutely.
been do- yeah, we've been doing reverse mortgages since the company has been doing them since 1990.
Okay.
The reverse mortgage has actually been an FHA product since 1989. So in 89 it started, in 1990 we started the company.
Great.
I have been doing reverse mortgages and been involved with them since 1992. So I know the reverse mortgage inside and out. I know
Mm-hmm.
exactly what you can do with it, how you will do it. Everybody is under the misconception that the reverse mortgage will take your home. That's the first
Yeah.
thing I always hear. So let's
Mm-hmm.
get that clear. The reverse mortgage isn't interested in taking your home. The reverse mortgage was created to make sure that homeowners could stay in their home for as long as they want or for the rest of their lives. So it was really created in 1969 for one woman.
Hmm.
And what had happened was her husband was a football coach, and one of her husband's players found out that the coach had died and the wife had never worked and she was on the verge of losing her home. So
Hmm.
at that point, he had graduated from college and he was working in the banking institution. So he decided he would do this reverse mortgage. He would make the equity available to the wife of the coach so that she didn't have to worry about income or losing the house. So that's basically how it started, just for
Okay.
that one person.
Interesting.
And later on, the reverse mortgage had gone through like the insurance industry.
Mm-hmm.
But as I stated in 1989, it came under the federal government under Ronald Reagan. So at that point, you had all your federal protections for the reverse. So what it does is for homeowners 62 and over, it allows you to use some of your equity that you have in the house to do either pay the mortgage off or to put it in a line of credit and use the money as you need. Because as we get older, what we find out, and this is really any time, it's not just when you're older, but
Mm-hmm.
the key to life is how much money can you keep? How much money do you have? Because you hear people all the time and never changes. It's gone on since the beginning of time. They have more month than they have money.
Yeah.
So you try to do all of the things that you're supposed to do. You work, you save your money, you have to pay for your expenses every month. So you have a mortgage or you have rent. And basically, the mortgage and the rent are the highest expenses that anybody has.
Mm-hmm.
If you didn't have to pay rent or you didn't have to pay your mortgage, just imagine how much money you would be able to have for the month. You would be able to save, you would be able to do a lot of things.
Right.
But as people get older, they refinance the home. And we have a lot of people who are 70 and 80 years old still with mortgages, 90. and still
Mm-hmm.
have a mortgage. And there's one instance where one of the customers, they're making $2,500 a month through Social Security, but the mortgage payment is $1,500.
Mm.
So you only have $1,000 left after you pay your mortgage payment.
Right.
Well, that has to go to your utilities, your gas, your electric, your water and sewer. If you have a car, your car insurance. You have to get gas for the car, food. You have
Mm-hmm.
to do everything that you need on that $2,500. So you've heard the terms cash poor, house rich.
Yes.
Your house has a lot of money in it. So you can use the reverse mortgage to free up some of the money in the house so that life can get better for you. So the first thing the reverse mortgage can do for you, if you have a mortgage, it has to pay that existing mortgage off. So for that case where the woman had $2,500 in income, but she was
Mm-hmm.
paying 1,500, we freed up that 1,500 every month, so now she doesn't have to pay it. Now she has 2,500 that she gets to keep, and she can do other things with. So
Mm-hmm.
now she knows that she has enough. She has to pay for her taxes and her homeowner's insurance for the house. But when you look at your taxes, your property taxes and your homeowner's insurance, for that $1,500 that she was paying every month, that's $18,000 she's paying for the year in mortgage. So 18,000 she's paying. She may only be paying $4,000 in principal off every year.
Right.
So you just spent all of that money to pay off a small amount left on your balance of your mortgage. So you have to think about it. How do you get a chance to use your money wisely? How is it going to help you? And what purpose is this going to serve for you? A lot of
Mm-hmm.
people say, well, I'm still working or I have enough income. I think I have enough income to keep the mortgage going. But is that a wise thing to do? What you want to do is you want to cut your expenses. Look at this as a credit card. When they tell you about credit card payments, if you have $1,000 balance and they make your payment $15 every month, then oh yeah, you can afford the $15 every month. But the interest that they're putting on you might be $25 every month. So you're
Mm-hmm.
really not paying anything off because you're paying that minimum payment. It's affordable for you to do, but you're going to have this $1,000 and it's going to keep going. By the time you pay $1,000 off, you've probably paid back $5,000 for that thousand. So you
Right.
really have to look at how does your money work for you? What's the wise thing to do? Inflation. Have you gone to the grocery store lately? Have you gone? You don't even have to go to the grocery store. Go to the gas station. Have you put gas in your car?
Right.
The gas prices are
Mm-hmm.
skyrocketing. So what I have to ask is all of these prices are going up. Everything that you use is now going up higher and higher and higher. But is your income going up any? No, it hasn't. And even if it increases, usually if it's Social Security, it may increase by 3%. But then I hear people say, well, they gave me an increase in my Social Security, but Medicare took all of that, so my Medicare payment went up. So they really aren't getting ahead at all.
Right. Right.
So
Well, we
it's
want to, yeah, we want to pause for a moment just to let those who are listening know if you have a question that you want answered, please put it in the comments and we'll ask it. As always, pull up with limbs and things is to confirm something you know, to challenge something you don't know, and to be able to share that information with someone else. So if you have a question, you want to talk about it, we can answer it in the comment section. And then if you want to reach Miss Threadgill, this is how you can reach her below. But continue. So I have a question for you.
yeah.
When people are considering reverse mortgages, what are some factors that are beneficial for them to consider?
Well, the first thing you're going to do is, in order to qualify for it, you have to be 62.
Mm-hmm.
It has to be your primary residence, and the primary residence is what's on your driver's license. Where does your social security go?
Mm-hmm.
Your bank statements. What address are they using? That's your primary residence.
Okay.
You have to reside in that for at least one day out of the year. So you can have other houses, but you can only do the reverse on your primary residence.
Okay.
As I stated before, you're responsible for your property taxes, your homeowners insurance, and maintaining the property.
Mm-hmm.
So that's simple. That's all you need to know in order to see if you qualify for the reverse.
Okay.
So then we need to know, what if you do have a mortgage, what's the balance of that mortgage? What's the value of the house? So that's the first thing that we do, is to find out, what are the houses going for in your area? How many bedrooms do you have, bathrooms? We want to establish that this is going to work for you. So once we know what the value of the house is and what your payoff for your mortgage is, that tells us if it will work or not. So to make it
Mm-hmm.
simple, if you have a $300,000 house and you have a mortgage balance of 280, there's not enough equity to pay off that 280.
Right.
So for a $300,000 house, your mortgage really shouldn't be over 150,000 is owed. So
Okay.
that's a simple figure. It's
Mm-hmm.
not the numbers that we're using, but it's just a simple number, so you can keep that in mind. If it's a $300,000 house and you have a $250 a mortgage, then the reverse is not going to work for you unless you bring money to the table. A lot of people have stocks, they have 401ks,
Mm-hmm.
and they'll look at, what's the amount that I really have to bring in. I'll cash something out, and it's worth it to me to just put it on the reverse mortgage and get this mortgage paid off, because you'll find the amount of time that you'll recoup that money back, because that's possible.
Now, do
But
you have to have an appraisal in order to get that done, or is that something you do? Okay.
initially, we do it. So I
Okay.
would come to you, I would ask the basic questions that I'm going to ask you: your date of birth, who's on the mortgage with you. If it's a couple, then I need to know both people's dates of birth, because this is going to be based on the younger person's age. So the younger person. So the if one is 62 and the other is 68, the 68 would get more money if they were on it by themselves, but we have to do it
Okay.
for the 62-year-old.
Mm-hmm.
And probably about 7 years ago, they changed it so that if somebody married someone that was younger. So we have an 80-year-old person and he's married to someone who's just turned 60. We can do the reverse mortgage, but it's going to be based on 60 years of age. We have to use that date of birth. So that
Oh.
means you just don't have as much money available to you. Because
Mm-hmm.
this is the key thing to know, is that the reverse mortgage won't allow you to use the full value of the house. So if it's 300,000, based on your age, you'll be able to use anywhere from 150 up. But you can never use all of the equity in the house. You can never use the total value of the house, because you say today, "Oh, I'm going to stay in the house for the rest of my life." Circumstances change. You may decide you don't want to live in cold weather any longer. Now you want to go someplace warm. You
Mm-hmm.
sell the house, you get the balance of the money that you haven't used.
Okay.
Okay, so if you don't have a mortgage on the house, then all of that money goes into your line of credit for you to use, and it becomes your extra income. And this money is tax exempt because it is not categorized as income, because it's a loan, it is a mortgage, so it has to be paid back. So that's why
Mm-hmm.
you don't have to worry about taxes. So this is tax exempt money.
So
This
if
is
someone is, I'm sorry, if someone is interested in, say, getting something in their home in order to help them age in place, and
mhm.
they're trying to decide between a reverse mortgage or refinancing, can you help them determine the difference? between
Yeah, the
those?
difference is going to be this. I tell anybody who's 62 and over, consider the reverse mortgage, because what the reverse mortgage does for you is it requires no monthly payments.
Okay.
So what you're trying to do is you're trying to have more money to use over your life. A lot of people still go into a refinance. Oh, but the interest rate is lower. Interest
Mm-hmm.
rates are comparable. For the reverse mortgage and the regular mortgage, they're the same exact thing. The only difference is with the reverse mortgage, there are no monthly payments required. There are no monthly payments. You can choose to make monthly payments if you want to, but you don't have to make one. With a regular mortgage, on the first of the month, you have to make your mortgage payment.
Right.
If they don't care what happens in the future, you have to make that mortgage payment.
Right. Mm-hmm.
Oh, you could have gotten sick and maybe you had a part time job. A lot of people are still working and they can keep things going. Well, we've learned through the pandemic, a lot of people weren't able to go to work because there was no work to do. Everybody was in the house.
Mm-hmm.
So a lot of people took a hit because they weren't making that extra money.
Right. Right.
And they could have been counting on this to pay for their household expenses. So when you are asking about somebody who wants to age in place,
Mm-hmm.
have a lot of people who do the reverse mortgage. If they're young enough, they will do the reverse. They will get long-term care insurance so that as time moves on, they're able to do everything they need in the house. Because not only did they eliminate their mortgage payment and they were able to save money, they were able to get the long-term care insurance, but now they can make renovations or changes to the house that they need to make so that whatever comes along, they're able to stay in it. A lot of people put those walk-in bathtubs in. They
Mm-hmm.
remodel the house so that when they have two-story homes,
Right.
like I've had a lot of people who have two-story homes, they can't go up and down the steps, but they
Mm-hmm.
have enough room on the first floor that they put a bathroom in, they put a bedroom in, so now they're just living on the first level. Or for those who want to continue to go upstairs, they'll put the stair lifts in. They'll
Mm-hmm.
make the adjustments that are good for them for what they want to do and how they want to live in the house. You know,
Absolutely.
some of them put the ramps in.
Mm-hmm.
They the way they come in from the garage or from the outside of the house, they'll redesign that so that if they have to have a wheelchair, they can get in and out of the house. So they look at what is it that I think I'm going to need in order to live in this house for the rest of my life. And a lot of people have the money so that if they need care, they have the money for the caregivers. Because
Yes.
you can go through the Department of Social Services and the Department of Aging,
Mm-hmm.
and they will come in and do certain things for you. But what some of my customers tell me is that they don't take care of 24-hour service. So they have gotten all that they can from the state, and they are able to make up the difference with the money that they've gotten from the reverse.
Mm-hmm.
Because a lot of people put their parents into the long-term care facilities or assisted living facilities, and they find that they're just not thriving the way that they think they can live longer if they go back home.
Absolutely.
And they've
Yeah.
done the reverse to bring the parents back into the house. So the reverse mortgage is for anything that you need to do.
Mm-hmm.
Anything that you need to do, because we don't control how you spend your money. The money is yours. The only thing the reverse is doing for you is making that money available to you without any monthly payment.
Got
So
it.
then I have people say, well, but then I can use up all of my money. Well, really, you can't use up all of it, but you could if you lived long enough. You could use it up if you live long enough. But the
Mm-hmm.
reverse mortgage, because it can be done more than one time, you
Mm.
can do this based on what's the value of the house, what is your age. Because every year you're older, you qualify for more of the equity.
Right. Okay.
So the younger you are, the smaller the amount of equity is that you can use. But as you get older, you can use more and more equity. So my highest number was I had a gentleman who had done it 5 times. And the last time he did it, he got $100,000 added to his line of credit. So there are ways that this happens.
Mm-hmm.
FHA raises their limits every year. So from last year, the limit was $765,600. But this year it went to 822,375. It will make another increase for next year. And next year it's probably going to be, it could be 850. And that what that is saying is that your house can be any amount, but FHA caps it at this limit. So if you had $1 million house, I wouldn't base
Mm-hmm.
my figures on $1 million in your age. I would have to base it at the cap of the FHA limit, the 822, and then
Okay.
your age. So that
Mm-hmm.
just tells you right there at 822, you already have more equity in your house because your house is worth more. So that means now you have a lot of equity left in your house that you'll never be able to touch because FHA's limit was not that high. I don't know if that was clear enough,
I
but
got it.
okay. So it leaves you plenty of money. So when people are saying, I'm going to use all my money, and when I use all my money, they're going to kick me out of the house, they are not interested in kicking you out of your house. This is the reason why it was
Mm-hmm.
done, to keep you in your home until you decide you want to leave or until you die. Those are the only two ways
Okay.
you're leaving your house. But I did say you're responsible for paying your property taxes and your homeowners insurance. People have lost their homes because they haven't paid their property taxes. But again, that
Mm-hmm.
has nothing to do with a reverse mortgage. Knowing that any mortgage that you go into, you have to pay property taxes and homeowners insurance. If your home is paid for free and clear, you don't have a mortgage on your home. You still have to pay property taxes and homeowners insurance. Don't pay your property tax bill. You will see your house in the paper for sale, for tax sale. That is how you can lose your home. So not through reverse mortgage,
Clarified
because,
that up.
say it again.
I'm saying I'm glad you clarified that.
Yeah. So, when you hear people say, "Oh, you they lost their house to the reverse mortgage." Nobody lost their house to the reverse mortgage. The reverse mortgage does not take homes. They're not interested in taking homes. They're only interested in you having a place to live. You have to pay the property taxes, homeowners insurance. Those are the things you have to do.
Gotcha. You have a question here. It says, does the person ever have to repay the money? Also, if they die owing, who gets the house?
Oh, the good question. Who do you have your house going to now? That's always a question I ask everybody. How do you have this house left? Do you have a will? Do you have a trust? Have you said who's going to inherit the house? That is who will get the house. So whatever you have in place now is exactly the way it would stay. Yes, the money has to be paid back. It's paid by the settlement of the estate. So
Okay.
what I'm saying is this: you have control over how much money you use in this whole transaction. It's up to you. You can use as much or as little money as you want. So you determine how much is going to be paid back. At your death, what will happen is whomever you've left the house to, if you've left it in a will, they have 6 months to settle the estate. They'll open probate. It takes 6 months to do probate. Their house will then become theirs and they can choose to do what they want with it. They can keep the house by refinancing the amount that you use and just keep going. They can sell the house, and if they sell the house, then the reverse mortgage is paid off and they walk away with the balance of the money. Now, for the reverse, everyone pays into an MIP, a mortgage insurance premium,
Mhm.
and that is an insurance pot. It's a pot of money. Everybody's paid into it so that no matter what happens in time, no matter who it is, what the situation was, you live to be 120 years old and you've refinanced it 4 or 5 times, and the market drops, and now all of a sudden, the house has lost value. But you've used more money than what the house is worth now. Your
Mhm.
heirs just have to sell the house for whatever they can sell it for. They may not walk away with any money, but they don't owe any money either, because the difference is made up from this MIP, from all of the money that everybody's paid into.
Mhm.
And then it's free and clear at that point. Then it's done. 86%, and probably now is even higher. Most people end up selling the house. They don't keep it. So that's one thing to keep in mind. They don't keep the house. And especially if you have more than one child. If you have 4 children, and what are you saying to them? You want them to keep the house, and all 4 of them have to keep the house going? It usually doesn't work like that because they're never on the same page financially about
Mhm.
what they're going to do. And there's usually one sibling that ends up carrying the weight of everything, paying the property taxes, doing the upkeep of the property if there's a repair that has to be made. Or is there somebody living in the house with you now? Are they going to live in the house when you're no longer here? Those are all questions that we go over to figure out exactly how you should set this up and how it's going to be dealt with. The mortgage has to be paid off when you're no longer here or when you're no longer in the primary residence. If it's no longer your primary residence, then more than likely you're selling the house. You're selling it. Reverse gets back the money that you've already used from it, and you walk away with the difference.
Got it.
Okay, so it is paid back. How it's paid back can be done in many ways. I have people who take out life insurance policies. If they see that they're going to use about $200,000 from the reverse mortgage, they may do an insurance policy that's going to cover them for 250,000. So now the children have 250 life insurance policy. They have the house also. So
Mhm.
there are many ways to figure out what you want to do and how you're going to do it. But you have to sit down with somebody and talk to them and tell us what it is you're trying to do. Everybody that I work with, I need to know, what are you doing this for? What are you trying to accomplish with it? Once I know what you want to do with it, then we know exactly how to go about doing it. You can't listen to other people. This is one thing you can't do. And like I tell people all the time, if you had a brain tumor, would you call your plumber and talk to them about, oh, what am I supposed to do? You talk to the people who deal with whatever the situation is. You don't talk to your neighbors. You don't talk to your sister. You don't talk to your brother. They may have done a reverse mortgage, so they know about it. But how much do they know about you financially and
Mhm.
what your situation is and how and why you would do certain things? So it's always worth it to pick up the phone, call someone, sit down with them, and tell them what you're thinking about doing. That's what we're here for, to tell you, well, I can't make you do anything. Not
Yeah.
interested in making you do anything. Just want to make sure that you have the correct information to make the right calls for yourself. Because, like I said, I've been doing these since 1992, and I'm still hearing, but they'll make you lose your house. They'll take your house. No, no, nobody's taking your house. You don't lose your house from the reverse. You lose your house from what you don't put in place. If you don't take the time to figure out what it is that you need to do and how you need to do it, then you can't expect for anything to happen when you're no longer here. You haven't given anybody any clear directions on what you want it to do, and nobody's prepared to do anything.
Yeah.
You can't leave a house to someone who financially can't afford to do it. If you know you have a child that's living in the house, if there's special needs, then there are all kinds of things you can put in place to make sure that they can stay in the home and everything is covered.
Mm-hmm.
But if you don't make a plan, then they're not going to have a house anyway. It's
Right.
all about planning. It's all about sitting down with someone to discuss what it is you have in mind. You have to throw it out there. You have to brainstorm with somebody who can help you through it.
Right.
Because we have all kinds of people that we work with. We
Mm-hmm.
have insurance people. We have regular realtors. Because sometimes a reverse mortgage isn't the thing for you. It may be something else that you need to do. But we're going to let you know what that is. And you can make those options. You can choose from the options that we're giving you. But our job is to try to keep you in your home if that's what you want to do. A lot of people now, we're going to find that they haven't paid their mortgage payment over the past year and a half.
Mm-hmm.
Those mortgage payments are going to come due. And if they didn't save the money, then chances are they're not going to be able to save themselves from it.
Yeah.
Or they have foreclosure notices that are coming up. They haven't paid their property taxes and the tax bills are due. So there are all kinds of situations that we can help with, but we just need to know. And you have to do it before you are under, they're pulling the trigger on you.
Yes.
You
Yes.
know that it's 15 days out. Well, you knew about this all the time. You should have talked to somebody. I mean,
Mm-hmm.
we've done them, we've gotten them done in that amount of time. But when you see something that you're having a problem with, pick up the phone and call someone. We're not judging you. We've all been there. Every life does not work the way that you want it all the time. So
No,
we've
it's
all come in with these hiccups. It's like, oh my God, when it rains, it pours.
mm-hmm.
If you have something in the house breakdown, it's going to be three of them. It's not going to be just one. It's a series of things that are going to happen.
Uh-huh.
I've had people who have had their car totaled. They just paid the car off. Now it's totaled. So all kinds of things happen. It's life. But we're just
Absolutely.
here to try to help you with that, help you through all of that.
So if a person is calling you and they're trying to decide or they want to get information from you, what things do they need to have to provide to you about their finances?
Well, the list that I normally send out, what I need to know up front to find out if the reverse is going to work for you is I need to have your name, the name of the person who's on the deed with you. If there's ever been anyone else on the deed and they're deceased, I need to know that. Or if you've been divorced, I need to know when that took place.
Okay.
Need to have the property address, dates of birth, and I have to know the mortgage balance. Is this a condo or is it not a condo? Because condos are different things. All condos aren't approved. So sometimes we can't do them because there's no approval for it.
Okay.
If there are, then I need to know about the condo fees, need
Mm-hmm.
to know about homeowners association fees. Would like to know what your tax bill is for the year and how much you pay in insurance, your homeowner's insurance policy. How much is that? And you can find that on your declaration page. What is your income? Where does the income come from? Do you have Social Security? How much do you get in Social Security? And if you have a pension, what type of pension is it? And how long are you going to be receiving it? And how much is it? Those are the only things that I need to know.
Okay. That's good to know. So if someone is looking to contact you, we need to have that information readily available.
Yeah, that would be the best thing to do. and I do have it in writing. So if you call, then I will ask those things. And most people know. Most people
Mhm.
know what they know how much they make.
Yeah.
They know they should know what the mortgage balance is if they have one. And most do know the property taxes and the homeowners, how much they pay for homeowners. Now, if their homeowners and their insurance is included in their monthly payment, if they have a mortgage, then
Mhm.
sometimes they don't really know that. But if I can see what's on, or they can read what's on their mortgage statement, I can sort of figure out what the taxes and what the homeowner's insurance is just from an escrow, because it'll have an escrow that you pay into every month, and
Mhm.
that'll sort of tell you. You can break it down from that point.
And then for people that are actually receiving the funds to use, how do they receive it? Is it going into a specific account or do they receive a check?
Now, when you do the reverse and you have money left over, if it hasn't taken all of the money that's made available to you to pay your mortgage off,
Uh huh.
then my suggestion is you can take it several ways. You can do it lump sum, that's paying off the mortgage. You can have it come to you in monthly installments. So
Mhm.
say you had health care every month. You had someone coming in and it was taking $1,000 a month. Then you wanted to have 1,000 or $1,500 come into your account the first of the month. Then you can set it up that way.
Okay.
You can have it so it goes into a line of credit. Basically, I suggest that you keep your money in the line of credit, because when it stays in the line of credit, you will see it grow, because they're taking that interest into consideration. So every month it gets a little larger. When you have to set it aside and say, this is how much I want every month, they will take that money and set it aside and make sure that they have the number of months for that amount so that you always have it.
Okay.
Okay. So
Oh,
to get more money, to get you more use out of your money, you can keep it in the line of credit, but you can do it any way you want. If you keep it in the line of credit and you don't need it right now, then what you do is you're going to have it in a different account. It's going to be through the reverse mortgage company, through the servicing company. You will
mhm.
request it. You can go online and you can type it in, fill out the form. They will electronically transfer that money directly into your checking account that you have told them to use. So
Okay.
we take care of all of that at closing.
All right.
Take from start to finish. We used to be able to do the reverse from start to finish probably about 30 days. Now it's gone out a little longer because we have to wait for the appraisals. Everything is slowed down a tad.
Mhm.
So give yourself about 45 days at least to do that. Because the way that it works is once I can figure out if it works for you, then everybody has to do a counseling session with a HUD certified counseling agency.
Mm.
Most of these, they've been doing them over the phone because of COVID. So now you're doing them over the phone. So you will call from the list of counseling agencies that we have, set up an appointment. They will call you back with an appointment time. Once you have gone through their counseling session, it's usually about an hour or so. It's not days on end. It's just to make sure that you understand how the reverse mortgage works, so that if you have it's a neutral party, so you have somebody else that you can talk to if there are questions. Like if you were talking to me, you you'll become an expert in the reverse mortgage. I sort of make sure that you understand exactly what's going on, how it's going to affect you, and how it's going to work for you. They
Okay.
will ask you questions. They'll walk through the entire transaction with you, go over numbers and everything so that they understand that you understand it. They issue you a certificate. Once we have the certificate, we will do the application. Now, at the time of application, most of the time I've gotten this information ahead of time. You'll have printouts copy of your driver's license, copy of your social security card, the declaration page of the insurance policy, the mortgage statement if you have a mortgage statement, and you will have all of your bank. You have 1 month of bank statements, all the pages, front and back. Even if the back is empty, front and back. If it says 4 pages, it has to have all 4 pages.
Okay.
So they'll just don't assume there was a blank page and I didn't need the yes. You will make the back side of the bank statement so that we see all the pages because they are numbered. So you have to make sure you do that. A
Okay.
copy of your pension, of your Social Security benefits letter. So every December, Social Security, if you're receiving Social Security, Social Security will send you a benefits letter, and it says that beginning in January, this is what you're going to receive. So it's a letter like that. And if you are getting a lifetime pension, then they've given you a letter at the time that you retired. And it says that you will be receiving this amount for the rest of your life. That letter we need a copy of. So that's basically it. So we do the application. Application is done in your home. Remember, the counseling is done over the phone. The application is done in your home. Takes as long as it takes for you to sign papers and for us to go over the page. Usually about 2 hours, 2.5. Sometimes people drag it out to 3, but as long as it takes, that's what we'll do.
Okay.
And once the application is in, we will then start the process. So it's logged into the office. We're able to order the appraisal. We do not have any contact with the appraisers. The appraisals are ordered through an appraisal management company. So I have a lot of people say, "Oh, I have a friend who's an appraiser." Well, we can't do that anymore. I don't know who the appraiser is. I don't have
Hmm.
any communication with the appraiser. The only person that's going to ever see and talk to the appraiser will be the homeowner. They
Okay.
will call and they will make the appointment to come over and check out the house. Now, if there are any issues with the house, I would like to know that up front. That's always important because this has to pass as far as the appraisal because it's FHA. It has to be in a safe condition, healthy, safe condition. So a lot of people will say, well, I have something that's leaking in the house. But we want to find out what's leaking and try to take care of it. We want to make sure that the house, we get it in a condition that the appraiser can walk in and walk out. It's not oh, what happened over here and what's going on over there. We don't want that. So that's why I come to your house so that I can make sure that there are no questions that are going to come up and we can address them so we know exactly what to do because we do want it to look the best that it can. It does not have to be a model home. I don't want you to have to put yourself out to do things that you can't do. A lot of people are doing the reverse because they need to make repairs in the house. And I
Hmm.
understand that. So we know exactly how you can approach it so it's not a headache for you.
Yeah.
Now, a
Let
lot of
me get this
go on.
question in before we forget. It is Miss McCall. Is there a cap on the amount of current mortgage in order to qualify for the reverse mortgage?
Yes. And like I said, we need to know what the value of the house is. So your mortgage, if you keep it around 50%, then the reverse will work. But it's based on your age. So a quick calculation is done by me. You just look at if you're 80, then if the house was 3, then you could probably do about, you could probably come in around 200 and wouldn't have an issue. But if you're 62 and the value of the house is 300, then we're trying to make sure that the house is somewhere around 150 the payoff is around 150, 160. But remember when I said at the beginning,
Yes.
is it also depends on the interest rate. The lower the interest rate, the more you'll be able to use. So the
Hmm.
interest rate, your age, and the value of the house. So it's not really a lot that you can do. We know how to calculate it, so I can tell you. Takes Well, it used to take me a couple of minutes to do it. But if I really don't know anything about your house and you're not able to give me what you think the value of the house is, you haven't noticed how much the houses are selling for around you, or you're in a community where there's a hodgepodge of houses, they're not all alike, then it usually takes me about a day to go through, look at the houses that have sold in your neighborhood that are like yours with the same square footage to get a general idea of what the value of the house is. Then I can do my calculations. So if you give me the address, give me your mortgage balance, and give me your date of birth, then within a day I'll have exactly what it's going to look like and if it's going to work. But remember, I'm not the appraiser. So, I'm just trying to do this to make sure that we know, okay, this deal should be good because I
Hmm.
don't want to waste your time and I don't want to waste mine.
Yeah.
I don't want to get your hopes up that this is going to work when I can tell you, no, it's not. But what I like to do is I like to, if it's not going to work, I like to do the calculations to try to figure out about when it will work. And for a lot of people, I tell them if it's not going to work now, we can probably do it in the next year. But if you have the ability to pay an extra principal payment every month, and a principal payment is not a lot,
Hmm.
pay an extra $50 on your mortgage. That's going to help bring down the balance faster. So you're a year older, you brought the balance down some, and hopefully the value of the house has increased because of the sales of the houses around you. And we've closed in the gap enough to do the reverse. So it's a numbers game. If somebody tells you you can do a reverse now, do it because you can't say, oh, well, I'll just wait until I get a little older
Hmm.
because you don't know what the interest rates are going to look like. You don't know what they will change as far as figures are concerned, and where you were trying to make up the difference and give yourself more money because of your age, then there are other market factors could take that away from you. So you were better off doing it when you could instead of trying to wait and then you can't. So those are
Yeah.
things you have to keep in mind.
Right. So you've got a follow up question. I know you mentioned that the reverse mortgage has to be done on your primary residence. But this question is, what about a second home that you own?
You cannot do a reverse on the second. On the second, it has to be primary.
Hmm.
So if you turn your second home into a primary, then you can do it. But it is where and there are a lot of things that let you know what is primary and what's not. Because if you look at a tax record, and this is just FYI, if you look at tax records, then you're going to look at taxes on both properties because all of these properties are going to factor into your reverse. Because we know that you have another property. We have to make sure that the taxes and the homeowner's insurance are current on that house also.
Hmm.
But when you look at all of the information, it says your name, your address, and then it says mailing address. Mailing address for all of us who live in the house is going to be the same as the property. But if you have the property address and the mailing address is different, then that's telling us that, there's something different here. There's something going on. So we need to find out why it's stated like that. Normally it's because it's a second property. You don't live in that property. You may be renting it out. Um, you don't stay there is basically what it's saying. Or maybe a lot of people will have their mail going to a child's house or something. But it has to be an explanation as to what you're doing. But your driver's license is going to show that. The bank statements have to coincide with your property. So, no, right at the moment, second properties cannot be used for the reverse, only primary. I read that they're thinking about being able to use a second property, but it doesn't happen now.
Okay. Well, I thank you so much for joining us. I think we answered all the questions that were in the comment section. Do you have a final thought? How about you give us a recap of the requirements for getting a reverse mortgage?
All right, the recap for this is you have to be 62.
Mm-hmm.
You have to be the homeowner. It's done on your primary residence. Primary residence is where does your driver's license state you live.
Mm-hmm.
Social Security comes to. Where your cable bills, all of those things, what has that address on it? You're responsible for paying your property taxes and homeowners insurance. Everything needs to be up to date. You have to pay things on time. We have to know what your income is. We have to also know that you're able to pay all of your expenses. So it's a simple process. So just remember, if you have the driver's license, if you're 62, if you are living in that primary residence, that's basically all you need to know in order to do the reverse mortgage. If you're interested, just pick up the phone and call. Call the 410-788-7070, or you can call me directly. And if you have a pencil or a pen, then I'll give you the direct number. The direct number is 410-570-0441. And I will answer that phone, and it will be me that you're talking to. You can leave a message for me, and I will call you back. But I'm available. Just pick up the phone, call, ask the question. Don't ask someone else. If you have, just pick it up, call. It is not crazy for you to call, and I'm not going to bug you. If you call me and you tell me you want me to call you and give you some information, I will do that. If that's all you need, that's all you're going to get. I'm not sending you a lot of mail. I'm not calling you constantly because I have a lot of people that I work with, and I like to work with people who are serious about getting the information. I
Mm-hmm.
don't want to lose time on someone who's not interested when I have other people who are. So if you are serious about finding out, you want to know, we can get right to it, find out if it's the thing for you to do, and it's done. Don't procrastinate. Don't just keep putting it off. Find out, and don't worry yourself to death about it. Just pick up the phone, call.
Thank you so much. I hope that you all have gained some information about how you can use reverse mortgages to age in place to help you do some things in your home to fix it up so that you can remain in there and be safe doing so. And then you can use it for anything, not just to age in place. So hopefully this
For
information has,
anything.
yeah, been beneficial to you. And
And
you've been, yeah, go ahead.
remember, things aren't getting any cheaper. You know, so
Absolutely.
so when we finally hit $50 for a gallon and got for to fill up your tank for gas, and a lot of
Yeah.
people are probably already doing it.
Mm-hmm.
Stay ahead of it. Don't get behind. Just investigate it. This is a financial tool. It's easy to use. Figure out how to use it. Put yourself in a better position and breathe. A lot of people can't breathe because they just don't have the money that they need to do anything, but they have the house. They have the house. And if you hit the lottery or whatever, you can pay it off anytime you want or keep it all going. Don't have to worry about that either.
Yes. Yes. So I wanted to make sure that you know, even though this doesn't feel like this is about physical therapy, it is because everything we do costs something, right? Whether it's your health or maintaining your residence. And so that's why we brought Ms. Threadgill here today to talk about how you can use a reverse mortgage to help you age in place, but also to live and have your best quality of life. So thank you so much for joining us. As always, hopefully you use this information to challenge something you know, to confirm something you don't know, and to be able to share that information with somebody else. Feel free to give us a call. If you are an aging adult in DC, Maryland, or Virginia, and you need physical therapy services, our number is 202-643-2636, or you can reach us online at limbsandthings.com. Thank you so much, Ms. Threadgill with Reverse Mortgage Answers. Everybody have a
Thank
good night.
you.
Yeah. Take care.